Hello everyone, my name is Isaiah Albin. My metric number is 23DBS21F2027. Today, I would like to present about recording process. Accounting is the process of recording financial transactions relating to a business. Accounting process are calculating and analyzing documents, posting in journal, ledger account, trial balance, adjustment and trials, adjust trial balance, preparation for financial statements, post-closing entires, closing trial balance. Debit note. Debit note is a document used by the supplier to notify the increase of certain amount of the sales previously charged to the customer. The customer tab will increase by the amount of state on debit note. The debit note the contains date, description of income, total value of additional amount charged, and the name of persons in charge.
A debit note is a document used by a seller to inform a purchaser of a dollar amount owed. As the name indicates, it is a note from the seller that a debit has been made to the purchaser's account. Often, a debit note is sent because goods have been sent or services have been performed, but the seller has not yet issued a formal invoice. The debit note is issued because the seller needs to record the transaction in its accounting records. Some businesses use debit notes to bill for items that are not related to their primary business. For instance, a distributor who sublets part of its warehouse will issue a debit note to the subtenant for the rent rather than an invoice, which the seller uses solely for the sale of goods. Debit notes are also used to make adjustments to incorrect invoices. In a case where the purchaser was underbilled, the seller will issue a debit note to the purchaser for the additional amount that should have been billed.
This is the example of debit note.
Definition of sales channel are sales channel is used to record the merchandise sold on account. Any entry relating to the sales of merchandise for cash is recorded in the cash receipts.
This is the example of sales channel.
Hello, my name is Usha Anna Perempuan G. Kasinathin. My no metric number is 23DBS 21F2016. The source of document that I'm using is payment voucher. What is payment voucher? Payment voucher authorizes the spending of money. You can use it to pay an outside vendor or to transfer money within your entity. Payment voucher are of two types, cash payment voucher and bank payment voucher. Cash payment voucher denotes payment of cash. Bank payment voucher indicates payment by check or demand draft.
One day, the Hana stationery shop manager went to Jackie's stationery shop, owned their supplier, to purchase stationeries.
Good morning, sir. I am from Hana Stationery Shop. The purpose I'm here is for purchase more stationery products. Good morning, madam. We can supply the products. Can I know how many products you want to purchase? I want to purchase 500 pieces of books and 2500 pieces of stationeries. Okay, madam. For that, you have to pay Rm 3000. Madam, wanna paid by check or cash? I paid with check. Okay, madam, here your payment voucher. Thank you for purchasing, madam. Here, this is the payment voucher. Payment voucher is included in cash book. A cash book lets you see the daily balance of cash on the hand or bank balance. A cash voucher should contain space for the name of cash recipient, the person initials, the amount of cash disbursed, the date, the reason for the disbursement. This is the table of Book of Prime and 3, cash book.
Hi, my name is Fatin Arina Bitiswami. My number entry is 23 DBS 21F2034. I'm from DBS 1A. And now I'm going to talk about invoice and sales channel. Invoice. The definition of invoice. First, an invoice is a timestamped commercial document that itemizes and record a transaction between a buyer and a seller. If goods or service were purchased on credit, the invoice usually specifies the term of the deal and provide information on the available methods of payment. The buyers record the details of the invoice in the purchase channel, will the seller record the details of invoice in the sales channel. Let's watch the video process of invoice.
An invoice is a document that itemizes a transaction between a buyer and a seller. Invoices can also be called bills or statements. While most invoices today are transmitted electronically, they still provide a paper trail that lists all of a purchase's pertinent details, including the quantity, price, date, parties, taxes, and a unique invoice number. Invoices also specify the terms of any credit transaction, including acceptable payment methods. It's important that invoices be accurate and complete. They secure a business's payments, and they provide clarity and protection when the books are wrong or the IRS calls. When a company sends an invoice to a customer, the invoice also serves to track inventory. Payment expected at a later date becomes an account payable for the buyer and an account receivable for the seller. Invoices are also important tools used by freelancers and contract workers to get paid and track their earnings.
Next, I'm going to explain about sales channel. A sales channel is used to record credit sale of business inventory only. The credit sale of non-current asset cannot be recorded in the sales channel. It is rent out from invoice issued to customer. At the end of month, the business will know the total credit sale made by their customer in that month. And now I want to show you the example of invoice and sales channel. Hello and Assalamualaikum. My name is Karimisa binti Abdul Jabbar. My metric number is 23 TBS 21F2026. Today I want to share about official receipt. Let's see the definition of official receipt. In cash transaction, an official receipt is a document used by the supplier to acknowledge the payment received from the customer. The supplier to the customer usually apply it. It contains the date, item description, total cash receipt value, and payment in cash or check receipt. What is official receipt used for? Receipt for uses. Receipt of proof of financial transaction, business to business and stock market transaction. Would require the issuance of receipt. Receipts are also required for transaction as proof of certain expenses. Example. When Emily goes to the clothes shop for buying a dress, she went to the cashier for before it. Then she paid in cash to the cashier, and the cashier gave her a receipt after showing she buy a dress. So This is an example of machine-generated official receipt and the example of manual official receipt. And then let's see the cash. Cash book is used to record all transactions of a business. It looks more like a T and computer site. One debit left side and one credit right side. All cash receipts are recorded on the debit side, while all the cash payments are recorded on the credit side. The cash book consists of a 2 columns cash book and 3 columns cash book. Cash book. Highlight the dates, title, description, total amount, and receipt for payment in cash. Cash book in 2-column cash book. Simply record the name of cash book customer and the amount of cash sales on the debit side of the cash book. Sales receipt was made in cash. We need to record the details in the cash column. The entry is in on the debit side because it said cash is increasing currently with the amount of the cash receipt.